everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothman, and we got a lot to talk about, so let's get things started with our earnings calendar for the week. Now, this week is rather light. We don't have a lot of major names, but a lot of smaller names which may be in your portfolio. We have 569 companies this week. Starting things off on Monday with BHP and TransOcean Energy, or RIG. On Tuesday, we've got Arista Networks, Medtronic, Cadence Design Systems, Occidental Petroleum, and the first of two big Chinese stocks of the week, Baidu. Now, on Wednesday, you've got Analog Devices and Carvana, and Thursday, you have Waste Management, Alibaba, which is your second big Chinese stock of the week, Booking.com, Square, and the Southern Company. Nothing to speak of on Friday, which makes it a rather light week. Now let's turn our focus to central banks. Of course, the United States is the most widely watched one around the world, but we don't have a rate announcement this week. We had ours a couple weeks back. Other central banks around the world, though, are reacting to interest rate environments. And of course, what happened last week with consumer price index and producer price index both showing elevated inflation has kind of the entire world guessing on what's going to be going on with the U.S. economy and therefore maybe impacting their interest rates. So let's dive into the Southern Hemisphere with the Reserve Bank of Australia. Now, they are expected to drop 25 basis points from 4.35% down to 4.1%. And that should happen Monday, right around 10:30 p.m. Eastern Time. Right after that, we have the Reserve Bank of New Zealand, which is going to be even more aggressive. They're going from 4.25. Markets are expecting a 50 basis point cut for the New Zealand dollar interest rate. That's pretty substantial, dropping from 4.25 down to 3.75. Now, that's tentative for Tuesday at 8 p.m. Eastern Time. Of course, things could change. You never know, but right now, that's what the slated time is. Now, of course, this is very interesting for any of you who are trading the Australian dollar or the New Zealand dollar, because these types of rate cuts, whether they happen, whether they don't happen, or their numbers are different than expectations, can create tremendous volatility in those markets. So be very careful if you are trading the Forex markets for those respective currencies. Now let's go look at services and manufacturing numbers for the world. This is one of my favorite reports just because it talks about all sorts of different countries around the world coming out with their services and manufacturing numbers, and maybe we can get a sense as to how they're performing. We start things off across the pond with France at 3:15 a.m. Eastern Time, followed up by Germany at 3:30, the EU at 4 a.m., followed up by England at 4:30, and then, of course, the United States at 9:45 a.m. Eastern Time. So a bunch of data, a bunch of exciting data, honestly. None of this is going to be steering these markets aggressively one way or the other, but it does give us an idea of how these economies are performing with regards to services and manufacturing. And of course, if you're trading the euro, the British pound, or even the US dollar, it may be impacted by these announcements. Of course, many of them happening before the US equity markets even open. Now, for the last piece here, I've got a trifecta of information, three pieces in the housing market arena. We start things off on Tuesday with the NAHB Housing Market Index. That's going to be at 10 a.m. Eastern Time. Followed up on Wednesday with building permits and housing starts at 8:30. And then finally, probably the bigger piece for real estate is going to be existing home sales Friday at 10 a.m. Eastern Time. Now, why is this important? Well, we've seen the yields on the 10-year start to surge. Right now, we're looking at over 7% for 30-year fixed-rate mortgages. Now, historically, that's not too high, but the higher it goes, the more it might start to price people out of this market, and existing home sales will be a good indication as to how interest rates and demand are being impacted. So keep your eye on those pieces of data. They certainly can be market movers. That, my friends, is your Monday Morning Must Knows. We will see you next week.